You're tuned in to Agriculture Today, and we start our Friday show with a grain market update. And as always, we're joined with K State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you, Shelby.
Dan, starting off our grain market conversation a little bit differently than we usually do. And first, kind of talking about some pre report estimates for that WASI report that's coming out today.
Yes, here as we speak, at in about 45 minutes, the USDA will release at 11 a.m. Central Time. They'll release their December WASDE report on again Friday, December the 8th, and overall, not a lot of change expected in these balance sheets. For corn, soybeans, grain, sorghum, and wheat. Again, for the December report, the USDA National Agricultural Statistical Service, or NASS, is not going out and surveying any farmers with regard to the size of their crops. That final survey will happen for the January report. So I think it's on January the 12th, I believe, 10th, 12th, right in there. That'll be the final crop production report, January WASDE report. There'll be a winter wheat and canola seedings report, grain stocks, all sorts of information that with a lot of potential to bring volatility to the market. So we come into this report today, and it's not intended or thought that it will have much of an impact with regard to what's happening on the U.S. domestic side. In fact, if anything comes about, it could be that we might see the USDA raise corn ethanol usage. That's been going pretty well, so that would have an effect on the balance sheet. Still, for the corn balance sheet, we're still sitting at an estimate coming out of November about 2.156 billion bushels of carryout, and really that large carryout number is a dominating I guess narrative, provides a dominating narrative on the corn market. That's why we've been pretty much moving sideways for the last month or so. Again, just the market's not worried, at least at this time, about what would happen. Now, it will begin to worry more so, I think, in coming months as we look to the risks to the South American corn crops, but not so much the case at this time. So not a lot of change expected there. For soybeans, there's always a possibility that strong crush and of soybeans for soybean meal usage, for soybean oil, renewable diesel could be raised. So that could have a positive impact on the soybean market. Ending stocks were in November projected to be 245 million bushels. So for the U.S. for the 2023-24 marketing year, chances that could move a little bit lower. We'll see what the USDA does, but again, not anything major expected, and really expectations of no change for wheat. We're already sitting at decades low U.S. projections of U.S. wheat exports, and if anything would happen, the USDA could lower that. I don't know that they'll do that yet. They'll probably want more evidence, but if they do, that would be a bearish move. Again, lowering usage for export usage, raising ending stocks on an already pretty bearish overall world and U.S. market situation. So not a lot there to look at. If anything does come about, you'd expect that the USDA could start bringing in some of the projected cutbacks that they've seen in South American production, particularly for Brazil, for soybeans, and that could come into play and lower world soybean ending stocks. There's a little bit of a projection about 1.5 million metric tons lower. So that's the built-in expectation that will start to reflect some of that, some crop damage down there. Also, some crop damage with too much rain in Argentina for corn. So that could start to come in. Again, expectations of about 2 million metric tons less, and really almost no change, slightly higher for wheat. So I guess, Shelby, when you have a situation where there's not much that's really expected for change in a report like this. Maybe you're as or more vulnerable. It would really kind of it'd be a wake up call for the market that, hey, there's more risk out there than right now we're really pricing into these markets. So we'll see what those USDA reports come out and show, and then probably the key issues will be South America and any change that happens in the U.S. Corn, soybeans, wheat, sorghum balance sheets. And if that comes about, then we'll just have to see where the market goes with it and figure out the direction next week.
And before the market goes anywhere, what is it looking like right now?
Well, as here on yesterday's closes, before all this happened, we saw again a continuation of corn moving pretty much in a sideways pattern as it has been doing. See that we had dropped down to about 470 within the last 1 or 2 weeks, within the last week and a half, as a low for the March contract. We're now paying attention to March. December is still around, but it's in the delivery period. We're paying attention to March, and so it had dropped to 470, closed at 488 yesterday on Thursday. So and when markets are so trending sideways, I think and waiting for new information, well, they start to look at technical indicators. But you do see in the last several days, as we come off those lows down to 470, that the relative strength index, which is one thing that we watch, has gotten up to at least a neutral level. So that's perhaps an indicator of the market having sold off so much that now it's looking for more information. And also probably that with pretty good usage and some risks in South America, they're not inclined right yet to go lower. That doesn't answer any of the questions that people that Kansas farmers who are storing corn are wondering about. Is, will it be profitable to continue to hold? And I would say that we do have some pretty good carrying charges right now from Dece to March, about 6.5 cents a bushel a month. So that would cover commercial storage. As you go from March to May, about 5 3/4, also pretty positive number. Even March, even May to July, 4 1/4. But that's in the market, so that's an indicator for farmers. But unless they actually take a position, try to capture that futures gain and then hope for basis to narrow up, that they're still pretty much in a wait and see mode, somewhat as some implicitly kind of a speculative wait and see approach to that. So we'll see where that goes. And I could talk. I wouldn't mind talking about on soybeans, the same type of situation. Again, for soybeans, we've been volatile up and down in the last bit of time. We here of late we've come down a little bit. The reason given, that'd be in the the January soybean futures contract, more rainfall or the thought of rain coming down in those dry areas of central northern Brazil is part of the issue. Decent, okay exports, not as much as had been coming on again as we have had in the last several weeks, but still enough to meet the pace that the USDA is looking for, and to the end of the marketing year. But if anything comes in as surprise, it would be the strong, pardon me, the strong soybean crush that could be reflected in that balance sheet, and that may help us out.
And so as we're thinking about all these, you keep mentioning kind of sideways for these markets. And so what maybe should producers be thinking about?
Well, we're still I should mention one thing when we talk about sideways market. Had been seeing for wheat very much a down market, and we have had from a low of $6 up to about 667.5. An upward market, which basically gets us back to where we were in November. So we had really fallen off. So anybody is still so in a sense, in the longer term, it is sideways even for wheat. So here, as they're thinking about that, they're, of course, if they're storing grain on farm, they have certain costs, cash costs of storage. You have to watch for shrink and keep it in condition and all of that. But if it's in commercial storage, it can be anywhere from 4 to 5 to 6 cents per bushel per month, and that's before interest costs. And so I think the financial management factor or issue that comes into play is if we could sell grain and take that cash, take the money from it, cancel debt that cancel debt that we're paying interest on at whatever percent, then that would put us in the mode of needing to also consider interest rates. One thing that's working against storage being profitable this year is just that opportunity cost of interest of what we'd cancel on operating notes probably to put ourselves in a position of withholding sales. So we have opportunity interest costs that aren't small this year, and that's, if anything, putting farmers who've been looking for corn and wheat at pretty much sideways markets really anxious to sell into something that's good in terms of price wise, and then again take that money and deal with operating notes that we have coming out of 2023.
And Dan, kind of as we get to the end now of 2023, kind of how would you sum up the grain market?
I think that we're right. If I were to sum up for this year, I would say that we had a sizable corn crop, a little more than we thought we'd have, about 15.2 billion bushels, and with that sizable supply in hand, it's put a lid on any worry and speculation on the part of grain of the grain industry about getting supplies. So it's become in the short run here more of a buyer's market. They feel they can afford to wait, and because of that, we've seen the type of prices where we're at. Again, futures below $5, 460s thereabouts, heading pretty much sideways for a bit, and really right now no threat that the market sees. I would say for grain sorghum, we've had pretty strong exports, so that's helped with cash prices anyway. So that's a positive. Sorghum is separated a little bit from corn because of what's happening with Chinese demand. For wheat, I personally think that the world situation is still very, very tight for wheat, record tight since about 2007, 2008. But coming out of the Black Sea region, we have such aggressive sales coming out of Russia, coming out of Ukraine at low prices, low currency exchange rates that the world has chosen not to be worried. And with that, I think personally that we're in a increasingly risky position in the wheat market, in that a drought, geopolitical disruption, anything that would happen to slow the grain coming out of that part of the world would be met with a lot of volatility in the wheat market. And it's just not now because the wheat's available, but we're sort of myopic with regard to the situation that we're walking into. And on the soybean side, when you're looking for an overall summary there, I guess I'd say that the size of the Brazilian wheat crops less than it was. We still are looking at adequate supplies. Worries in that market have put us at about $13, $13.25 thereabouts, and a really worried market, a short crop market, would be more like in this situation more like 14 and 15. So if anything stands to disrupt the markets, and then this generally low price narrative, it would be that we turn dry and don't come through in South America, particularly Brazil, with as much corn or soybean crops as we're anticipating. And then if that happens, we get out to February, March, April, we'd have a different ballgame in the markets.
Dan, I appreciate you taking the time to join us today and give us our grain market update.
Thank you, Shelby. I appreciate it.
That was K-State grain economist Dan O'Brien. I will link the WASI report in today's show notes so you can find it there when it does come out. We're cutting to a short break now on Agriculture Today, but we'll be back with more ahead.